Hello, guys. How are you doing? It's been too long. How are you doing? It's a pleasure having you guys here. Trading Live, how are you? It's been a while. It's good to have you guys here. And I'm gonna wait for you guys to come in gradually. And I would also wait for you guys to acknowledge that the audio is good to go. And you can also see the screen as well. Awesome. It's been a bit long that I've been here in this section. I have been working in the background, doing some building. Let's put it that way. I've been in the kitchen. I've been building something. I've been creating something. And I'll let you guys know what that is towards the end, right? And of course, we already know that 2024 is around the corner. So of course, everybody should be making plans for next year. It's not too early to make plans for next year. You don't have to wait till next year to make plans for next year, right? You get. So it's a pleasure having you guys here. If you are joining us for the first time, welcome. My name is Tolu. I'm a Forex trader, analyst, and a coach. I've been doing this for well over 10 years now. And what I try to do is to simplify the business as much as I can for everybody to understand it. So don't forget, as you are joining us, you're welcome. You can put in the chat section, in the comment section, where you are connecting to us from. Let's know where you are connecting to us from. It's always a pleasure to know that through Trading Live, we meet different people from different parts of the world, right? So I'm here in BC, and that's in Canada. And of course, my time is in the wee hours of the morning. Well, I won't really say wee hours of the morning, but it's still in the morning. It's just about 5 a.m. over here. And of course, the market is up and running, and we are in London session. Yes, we are in London session, and there is a lot that we are going to be talking about with respect to gold. I'm going to give you the 2,000 pips short opportunity on gold. And as a reverse, I'll give you like a 1,000 pips opportunity to buy. In the market, you could always go up or you could always go down, which is long or short. Long for up and then short for down. So guys, don't forget in the comment section, let us know where you are connected to us from. We are not going to be here for long. We're just going to dish out the information and then we're going to be out of here, right? So a quick one before we dive into what we have for you today. A quick disclaimer. Kindly note that trading in the financial market carries a high level of risk. And what does that mean? That simply means you need to protect your accounts accordingly. Make sure you're using the proper risk management, you're using the proper lot size, and you're using the proper volume for your trades. And of course, if you already know, trading gold is massive. Gold is a runner. You need to ensure that your risk management is on point based on your account balance. And you also need to ensure that you have a stop loss in place. Trading without a stop loss is very dangerous. And of course, you might probably have witnessed that last week when we had a series of news for the USD, like the CPI, like the FOMC, PPI, retail sales, and so on. So trading without stop loss is very, very dangerous. And then please also note that this information that we're sharing is strictly for educational purposes. If you place trades based on the information and it works out for you, good for you. And if it doesn't work out, please note as a disclaimer, not all my trades will be winners. So that means that I'm going to have losses, but I have put into consideration the losses, I have calculated them, and I have accepted the losses before they even occur, which is very, very key, very, very important. Every trader should know how to accept losses before they occur, right? Very key, very, very important. Okay, so now moving on, we're going to do something now, right? We're going to do something now before we jump back to what we have, right? Before we jump back to what we have based on the charts. Because if you look at the charts over here, this is the monthly time frame, and then we're going to drop down to the weekly, drop down to the daily. We're going to be doing a multi-time frame analysis approach for you, for everybody, so that you can have a better understanding of price and what price is doing on different time frames. But before we jump into that, one thing that I want you guys to also note is this, is that you need to always check the calendar. It's very, very important for you to always check the calendar. And as we're looking at the calendar, it's key that you understand high impact news, when the high impact news is going to occur, because you do not want to get caught on the wrong side. Okay, beautiful. I can see some people are joining, and somebody said from Nigeria. Let's know your name as well. I don't really know the name. It's just some people with code names. Let's know your name. Z468, some numbers. You said from Nigeria. Good. Let's know your name and where you are connecting to us from. Okay, don't forget, we're not going to be here for way too long. I'm going to dish out the information and then I'm going to be out of here, right? I have some trades I'm eyeing, and that's including gold as well. And that's what we're going to be talking about, potential 2,000 pips on gold. But then we said it's very key, paramount for everybody to ensure that they check the calendar before placing trades. Why? Because when you check the calendar for high impact news and you place trades just prior to the news and the market goes whipsaws, spread increases, slippage, and so on, you would have yourself to blame. Today is Monday, December 18th, and you can see we do not have any high impact news whatsoever. The high impact news are all these guys in red, and we have adjusted the filter over here. This is the filter over here to show us only the red high impact news for each day in this week. Now, by the way, this week more or less is, I could arguably say that this week is the final week of trading. Why? Because after this week, we have Christmas and liquidity is going to dry up. Liquidity is going to dry up in terms of those in the banking sector, Wall Street. I'm not just talking normal, regular banks, top tier banks. Those are the heavy players in the market, Wall Street and the likes. They're going to be on holiday. People are going to be traveling to spend time with loved ones, family, friends, and so on. The liquidity, without a doubt, is going to dry up. And when that happens, you could easily have the spread increase on you. You could have slippage. You could have, not even really slippage. You could have whipsaws, erratic moves in the market. So pay attention to that. Prior to this week, the market liquidity is going to drop. So these are the high impact news that we have over here. You notice that we don't have anything on Monday today, right? And then Tuesday, we have a couple, but we don't have anything for USD. Why are we even looking for the news for USD? And that's because when you have the USD, as an example, if the USD is going to be dropping, right, then you should expect gold to appreciate. This is not 100% correlation, but it is high on correlation, and it is something that you can use to place trades on. Meaning when the DXY, the USD is dropping, then you should have gold appreciate. And then when the USD is appreciating, you should have gold depreciating, right? So nothing Tuesday tomorrow, but then on Wednesday, we have news coming out for the dollar. That's the consumer confidence. On Thursday, we have news as well coming out for the dollar, final GDP and employment claims. And Friday, you have the core price index as well, and coming up for Friday as well. So from Wednesday, Thursday, Friday, we should have some volatility introduced to the market. These are things that we need to pay attention to so that we are not caught up on the wrong side of the market, right? Now that that is over, let's jump back to our charts and let's talk about the charts, and then let's see what we have for you. So now looking at this monthly time frame, I repeat, looking at this monthly time frame, you will see what? You will see something very unique happening now. You see where it is reacting to a resistance. or you could call it a supply zone. No matter what you call it, you need to understand the market. There are more or less a lot of things arguably are the same thing. Whether you call this resistance or supply zone, you are indeed correct. I can see price has been reacting to this. This is the monthly time frame, by the way. Price has been reacting to this area, and then we have this massive fake out. This candle here, you can see it pushed out of this area, but immediately the sellers came in and took it back all the way. And it sort of looks like a kind of pin bar. Well, some could also say it looks like a spinning top. The market on the monthly time frame hasn't ended yet. We have about 13 more days. But notwithstanding, this is looking like a rather interesting candle, especially based on the false break, the fake out over here. Now, what we should be expecting naturally from this point is price dropping right back to this area here, or where we had our last resistance support area, our last flip zone. I like flip zones a lot because price is attracted to that area. There should be a lot of orders that are sitting here, especially for the position traders. Now, if this should occur from this point here all the way down here is even about 4,000 pips. That will be a 4,000 pips move to that downside. But what if it doesn't get there, but then it gets just this area here where we have this form of demand? If this is the case, then we should have what? We should have about 2,000 thereabouts, roughly 2,000 pips to the downside, right? And that is why we said we have about a 2,000 pips move. I didn't say 4,000 because you can as well get here, but of course, you know, that will be much later into 2024, into the year 2024, right? So guys, don't forget, as you're joining us, let us know where you're connecting to us from. We won't take much of your time. We'll be rounding up within a few minutes. It's been a while I've been here, but still let me pop in, give you some information that, you know, you could feast on, and then it could take you into the new year, 2024. The new year is around the corner. By the way, compliments to the season to everybody, especially to those that celebrate it. Compliments to the season to you. So this is what we just talked about on the monthly time frame. Now let us cross over to the weekly and let's see what we have over there. From the weekly, you can still see that area clearly. Now, the thing about when you drop down in time frames, as you said, we're doing a multi-time frame analysis approach. The thing now about when we drop down in time frames is that we can see things a bit clearer. So you can now easily see here, 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 that clearly acted as what? As resistance. And then price is now at this point. I don't know whether you understand candlesticks and how you can combine candlesticks. The last time we had like a pin bar in this area, if you look at the pin bar here, from this area, you can see that from this pin bar, the market went back all the way to this point here, right? That means that from this area that we called our resistance, market went down back to about 4,000 pips. Now, I'm not sure if you know how to combine candles, but this candle here and this one that poked out, that gave us the fake out over here, combining the two of them together will give us a 2-week pin bar. I repeat, it will give us a 2-week pin bar. So we have another pin bar here. We had another pin bar here, if you look closely, this candle, and then it dropped to this area here. Why did it drop here? Because of this demand. So it dropped to this area here, which is clearly a demand. As you can see, this is a demand over here. This is another demand over here as well. Now, we have another 2-week pin bar. Interesting, you might say. So that means that this area, especially with the fake out, should do what? Should drop to this area here. And if this is the case, I repeat, if this is the case, what would we have? Would have like what? That 2,000 pips that we mentioned. So there's a potential, I repeat, there's a potential of making 2,000 pips on this bad boy, on the gold, on the precious, shiny metal, right? There is the potential of making 2,000 pips. And of course, this is going to run into next year, well into next year. But then I always tell traders, anything can happen. The market can flip, and then instead of going short, it can go long as well, right? Let's continue. I want to give you more information Because whenever I look at the market from the monthly all the way down, even sometimes I could look at it down to like 5 minutes to look for how to better get a very discounted entry where the stop loss is rather minimal. And then, of course, the take profit is good enough that will give you 5 reward, 10 reward, if not even more. So this is what we said here, 2 week pin bar, combine the two of them together, and you should see what we have here and price should drop further. Now, let us continue this story. I'm saying story because yes, indeed, price is telling a story. Now, look at this here. From this point to this point, right, after we measured that it was a 2 week pin bar, on the daily time frame, what did we have here? This same candle from the daily, that was a fake out. Look at what it produced. It produced a bearish engulfing, a bearish, and if you know your candlestick patterns, like the bearish engulfing, bullish engulfings, bullish pin bars, which is also known as the bullish hammer, bearish pin bar, and so on, doji, spinning tops. If you know your candles very well and what they signify, you'll notice that a candle or candle formation such as this bearish engulfing simply means that the market should drop further down. And this bearish engulfing, this is where it is here. This candle swallowed the previous one. And then look at what has happened. Now, nicely, it has broken below that candle. As it has broken below the candle, normally on the daily time frame, this is where you'd have placed your entry to sell, and it's there right now. But then if you're going to sell here, naturally, your stop loss should be above that resistance, even above that candle. It's going to be above the candle. But then if you're going to do that, then your stop loss is probably going to be about over 1,000 pips. And that would be crazy. I'm sure people's account balance might not be able to withstand 1,000 pips stop loss. Not at all. But then if you look at what we're doing over here, we're dropping down in time frames to look for better opportunities for you at a discounted stop loss. That means that you should get a smaller stop loss. Now, as it broke out here, it stopped here and then pushed higher. And then we drew our Fibonacci, showing you that it has gotten to 50 retracement. Even if it gets to 61, it's still very good for short. But now it got to 50 and then reacted and dropped down. So that means that people were selling at this area of 50, which is confluence as well with these highs over here. It's confluence to these highs over here, right, of resistance, and then the price dropped down a bit. Now, assuming you didn't get your entry at this place, because this is the daily time frame, so you didn't get your entry here, what are we going to do now? We're going to drop down further in time frames. We drop down to the 4 hours. As we drop down to 4 hours, you can see this clearly now. You can see this area here. And that's why we said we have an area here. You can see this area here of resistance. It didn't quite get here, but then got here again. If the market should get back to this point, this is another time, another, opportunity for you to take shots over here and then drop to this point here, first of all, and see whether it drops further down, right? So that's what the market is doing now. It's currently here. We need to wait for the market for what the market is going to do next. This is the 4 hours time frame. You remember we started from the monthly to the weekly to the daily, now to the 4 hours. Now on this 4 hours, this is what we're looking at here. But then I have another question for you guys. What if the price doesn't push back up to this point here and then starts to drop from here? If it starts to drop from here, that means that we did not get an opportunity. I'm going to show you something even further, because looking at time frames, and if you notice all the way from the monthly down to the 4 hours, we are getting information of selling and we're looking for areas to sell. This is the hourly time frame, by the way. You can see this hourly time frame. What jumps out us first of all is this wedge, this triangle that we had, and price broke out and immediately it came back to retest this area here, right? So someone could have even gotten a discounted entry here on this hourly time frame. We've gotten all the way to the hourly time frame. And then from here, look at what happened. We had this area here that acted as support. Now look at where it is. Price broke out here and then pulled back. That means that this is also a good area to look for short opportunities to sell and then to take the market down to this point. This is also another good area here. Now, one thing I want to also tell you, that it might not be your first entry that will, work and give you that good runner. You might have to take like maybe two or three bullets, two or three shots on that, position to enter before it works out accordingly. So this could easily be the first one for you to go on shots, right? And if this works out, great for you. So there's an opportunity here. I'll call this number one. And there's another opportunity here, which is about 2050. I'll call this number two. The good thing about 2050 now is that this also matches with our Fibonacci that we're looking at on the 4 hours time frame. Remember, we looked at the Fibonacci drawn on the 4 hours and the daily at 2050. I'm going to go back to that now and then show you for clarity. So on the 4 hours, we had that 2050. You can see the 2050 here, which was where we said if the price should come back here, right, that would be a good one also for us to look for shorts at the 2050 and drop because of what we had. If you look to your left-hand side, you can see an area of supply, an area of resistance there. So that is very much valid. So you can see in the hourly, that's the same thing that we have drawn up here. But then this is short for price to go down eventually for 2,000 pips. 2,000 pips to the downside. And then I have a twist for you. What if it doesn't go down? What if it pushes higher back to this point here? If that is the case, how would you react? Where will you look for opportunities to go up to that point for about 1,000 pips? So either way, whether it is long or short, right, there is still opportunity for you to what? For you to get in and make good amount of pips. I'm just showing you this for those that might be thinking of going long, what you should pay attention to. You should be looking for this area to fill first of all. Remember we said this is number one area for us to sell, and this is number two. So if this area is going to fill, that means it's going to push higher. What you should be doing is to be looking for price to pull back here, where number one, that was supposed to act as resistance, should now act as support and push higher. Now here, that should act as resistance. If this fails as well, remember you're already here, jumped in here on longs. If this fails as well, you should push higher and then use this as a stepping stone to continue to move to the highs at this point here. If this is the case, you need to pay attention to flip zones. We call them flip zones. Flip zones are areas that have acted as support and as resistance in the past. So these flip zones are areas that when they act as support and then resistance, when they get there, you are expecting something to most likely happen. And that's why we said on the flip side for longs, this is what you should be looking at. And we're looking at this from the hourly time frame. You could also drop down to 30 minutes, 5 minutes, but then I won't be dropping down to 5 minutes thereabout because the lower you drop, the more noise you get, right? You get too many trades and then you have too many bullets. And then before you know it, if you've placed like 2, 3 positions and their losses, it's going to work negatively on your emotions. Your psychology would be a bit all over the place. And psychology is very big when it comes to this business. I always tell traders, for me personally, I haven't placed any trade this week, but I'm eyeing some positions like on this gold. I'm eyeing Euro USD and also GBP USD. That's the fiber and the cable. With this killer here, I call it the killer because it's a mover with gold. So I always tell myself that Tolu, you're going to have losses. I'm not cursing myself. It is part of the business. Meaning that I'm preparing my mind so when the losses actually occur, I know because I was expecting them. Because when you place a trade, right, the probability of it being a loss is also there. When you place a trade, accept the loss. If you can accept the loss, then truly you are practicing proper risk, right? You're practicing proper risk management where your stop loss is in place, and then also you are using the appropriate volume lot size based on your account balance. So with this here, we could have a 2,000 pips move to the downside, or we could have a 1,000 pip move to the upside based on the analysis that we have given now, right? And then don't forget, risk management is key. Stop loss too is key to protect your account. If you're not using stop loss, then your risk could easily shoot up. You could be increasing your risk without you even knowing it, because you could have some massive candles like this one that could go against you, or this one that could go against you, and then no stop loss, it means that your account is bleeding heavily. I repeat, it means that your account is bleeding heavily. Now, with that said, we're going to be rounding up here. As I said, we're not going to be taking much of your time. Nowadays, I prefer doing something shorter than longer, meaning that you can easily go back and watch this on playback. You can easily go back and watch this on the flip side, right? And then you have any questions, you can shoot. And then, of course, I will get back to you in good time if you have any questions. So for those that are here, where are you connecting to us from? I didn't really get that information from you. Let's know your name as well. That will be good for us to know. And then as we're rounding up now, if you have any questions, feel free to ask. And then another thing I also want to state is that we have a school, CSA Forex, which is my academy, my school. We have a proper school now, right? Where you can come in and learn a lot for free. Yes, you can come in and learn a lot for free. What do I mean? I'm going to show you this, what we have for you, right? On the CSA Forex section. So if you cross over to the website, I'll put the website link in the description. I'll put that now for you. Let me just copy this and put it in the description for you guys. So you can as well come over here to the CSA Forex School. And then for those that are new, because of course we always have newbies, or for those that are struggling, we have something for everybody. Now, if you look very well, scrolling down, right? This is it. Now, trust me, if you are ignorant and you don't want to learn how to trade the proper way, you would suffer immensely for that. If you are here and you have crashed an account, you understand exactly what I mean. So if you look at what we have for you, you can see everything is well, arranged for you. Number one, beginners webinar. The beginners webinar covers everything you need to know from the trading application, which is the MetaTrader 4, how to use it the proper way to open, close, modify trades, how to also set stop loss and take profits. And then it covers market analysis, fundamentals, technicals, risk management, how to properly calculate your risk, and then of course psychology. Number two, for those that do not have an account, you can open a demo account over here, right? You guys can check out this section, right? Has a lot of information for you. And then we tend to run free live web. I'm mentioning free because people might be thinking, oh, this information here are paid. Well, not all of them are paid, right? There are a lot of things that are free here that can help you to take your trading to the next level, to catapult your trading to the next level. So we usually tend to run 3 days free beginners live training, right? We had one about 2 weeks ago, but we've stopped now for the year. And we're going to be resuming January. Of course, it's the holidays, so I'm winding down a lot of things. And of course, after this week, my trading is going to wind down as well. So you have the Forex trading for beginners, for those that are new, and also for those that are struggling. It's always good to go back to the basics, to the beginner's point of view, and see what you might have missed out on. Basically, this 3 days training is live and it covers everything that is already here on the webinar for you. Very key, very, very important. We have a trading room. Now, this one, you have to subscribe to it, right? For now, it's about $49, but it's not compulsory. And then we have a Telegram community, just a quiet area where I pass key information to traders so that they understand the market, how it works, how it ticks, and so on. This one also, you can subscribe to this. It has some extra information that isn't here, like the Fibonacci retracement, how to use it as a confluence tool. You have some other things here, different ways to make money from the business, different ways to avoid unnecessary losses, and so on. So you have a lot in this school area that you can take advantage of. And yes, we have risk management calculator. A lot of people don't know how to calculate their risk. They don't know the proper lot size volume, the position size they're supposed to be using. So we did something for you. And if you click here, that's number 7. Click on number 7. It takes you to where you have a look at the risk management calculator. Let me show you that real quick. You click here, it opens up the position size risk calculator here where you just punch in your details here, and you have this information here as well that can help you out. So you could try this out. It is, good and helps your trading to be a bit faster so you're not cracking your head. Trading plan, trading journal, you have to subscribe to this. Contact us if you have any information, referrals, affiliates. You can come on board, refer the website, and once people subscribe to the paid section, you get 20% on that. There's a YouTube channel that we have. You're interested in one-on-one. So we have put everything here for you. And if there's anything that is here that you feel you might need that isn't here, let us know. And of course, we will do that and add that for you as well. And this is just going for those that will be interested in subscribing to all of those things. You get all of them in one package, one bundle, right? These are testimonials from people that have attended the sessions in the past. So you can go back to the website, take your time and go over them. Now, if you're interested in learning how to pass the prop firm, a lot of people have been big on the prop firm this year, last year, and it's getting even bigger. If you're interested in learning how to pass the prop firm, you can join us in the membership area. So you can subscribe to that. It is just $49 per month and then $119 for 3 months. And this price is going to be going up in January. It's going to be going up to $97. Just in case you're interested in joining us now, you could do that. And this is going to be launching in January, right? So you can get that now for $49. So if you're looking to transition into Forex affiliate, you want to know everything, how to become an affiliate, how to earn while you learn, join us here. And of course, the different ways that you can benefit from the many advantages from trading the business, the financial market as a whole. Because in every business, there are different ways for you to take advantage, right? So this is the trading school for you, right? So you can explore it. I have dropped the link in the description. And of course, if you have any questions, feel free to reach out. So honestly, thank you guys for joining me. It has indeed been a good one. I'm not going to take way too much of your time. We'll see how we can schedule another one sooner than later. And then I will definitely give you an update. So you can subscribe to the YouTube channel, check that section, and of course, an update will pop in there to give you what is going on, right? We'll give you more information on what is going on with the gold. Did it move in terms of our 2,000 pips or the 1,000? Either way, 1,000 pips is, you would agree with me, is a beauty, will be a beauty, right? Honestly, thank you guys and enjoy the rest of the day. If you want to reach out to me, ask me any question whatsoever, you can also reach out to me on Instagram and you can catch me at CSA Forex. I've dropped the link there. Thank you guys. Enjoy the rest of the day and goodbye for now. Cheers. Don't forget, liquidity is going to dry up this week. Protect your account accordingly and do the needful. Calculate your risk, calculate your lot size, volume. You can use the risk management calculator on the website, on the school section. Make sure you have your visible stop loss. I had to say that 2 times so you understand the importance of it. Make sure your stop loss is visible on your charts, right? So you don't get caught up in heavy drawdowns. Okay, guys, thank you and catch you at another time. Cheers.